Hello everyone, Nellirajan is with you. Welcome back to the third session of FirstBIT Accounting. Today we are going to see list of points. Today's agenda is to see that credit and debit notes, warehouse transactions, VAT returns process, and month-end closing, and all the reporting financials and the transactions reports. So for last two sessions, we have made all the transactions to see how to see the VAT return affecting in this today's session and the all respective reporting as well. Let's start with the debit and credit notes. First, I will proceed with the credit notes. In the sales transaction, you might have done a lot of invoices to your customers and they are returning the goods. If you are dealing with the inventories, they are returning the goods. Or if you want to make an invoice correction. For example, let's make one invoice now. Example, I will create a new invoice. So we'll go to sales. I will make a direct invoice to see the understanding. So once I click create, it will open the screen where I will create, select the customers and date of the invoice. Example, yesterday I created this invoice. Okay, so the transaction type should be sales to customer. Emirate should be by default Dubai. If you're a company registered on Sharjah, you have to select the Sharjah. Some depends on the company where you are residing. And other fields and all not required. Here the link is VAT applied will be there by default based on the company master screen which we define taxpayer, so it automatically fetch here. So everything it will be filling here. Let's say we are selling this product. Example 1 quantity 500 price. Okay, and I will get the posting and I create the tax invoice as well. Now customer saying that they are returning the goods. This yesterday invoice, this invoice which we made it now. And if the customer returning the goods, and you have to just select the invoice and click generate. There is an option called goods return in the bracket credit note. You can go to directly also sales credit note screen, not tax credit note screen. Here you can just create under which company you are doing it and select the transaction type should be goods return. The transaction type will be 3 type of transactions. So if you're selecting goods return, it automatically select everything here. The basis only you have to select to see from which invoice you are making this one. So if you're making directly credit note, you have to go to here and enter the manually and click basis. So that the system will fill up automatically. Once you select the basis, you have to click it here, this button, fill by basis. So whatever you have entered in the invoice, it automatically comes here. You don't want to type manually every time, means you can just close this. You can directly go to the invoice number which they will which you have issued earlier. So select that invoice and click generate, click goods return. So automatically system will fill up everything here. So you just verify it and click post. Earlier, there is no tax credit note was not available before 2018. So now, as per the law, you have to issue a tax credit note. So once you click post this credit note, you have to click the generate tax credit note in the below. Once you click the generate tax credit note, it will affect your VAT return as well. VAT return screen. So because we have to show that we issue a tax credit note to the government. So based on that, you have to create this tax credit note. And you can see the debit credit note here, the transaction. If you click here, the posting would be debit the goods and credit your prepayment of customer account. That means this credit note value is 500 dirhams. Okay, now you are issuing to him that 500 dirhams as a credit note. Later, after a week or after a month, they are making another invoice. Example, I will make go on here. the same customer I have to select, and the same customer if they are making another invoice, maybe after some other day, and they are purchasing maybe 3 items for this, and one more item called okay, like this. If they are purchasing, and the total worth of the invoice is 1,600. You have to, I already mentioned you in the previous session that how to offset the advance payment, advance received from the invoice. The same way, you have to click the credit note as well here. One second. Once I post the credit note, you will see from here tax credit note. Today only I created the tax credit note, so I will make it as a tomorrow's date. But because of date is not showing, so I'm changing the date now. Sales credit notes. I will change that to yesterday's date to see the offset. That's the reason. Now today I'm making the invoice, some other invoice. So when I make this invoice, credit note issued on okay 17th September we have created the credit notes. Now after a week or after some other day when you're making another invoice, you have to go here, select the same which you issue the same customer, test customer in the credit note screen. You have to select the same customer here to making the invoice and click example this item 3 quantity, and I'm just selecting the offset prepayment. It will show here this screen. Once again I will close this, that's why. So we have to, the reason is based on the date is very important here, that once you create the credit note, which means 17th September is the creation of credit notes. When I'm making an invoice, maybe tomorrow, and I'm selecting the contract, company, everything. I'm giving that item again. It should come now to see the offset. Because of same entity also, you have to check that main warehouse. So here you will see the settlement as well. The worth of 500, it's automatically settled out. If you go see the credit invoice now, this invoice we made, and if you see the hierarchical structure, you can see here this invoice created, and against that so automatically what will happen is this you are returning the goods for this invoice. Then there is one more option also is there when you are correcting the invoice for the credit note. This, for example, same customer, I'm making another invoice. Okay. Here I will create the generate tax invoice as well. But after submitting in the VAT return also, you are saying there is an option you have to correct the invoice amount. Then you have to use this generate invoice correction credit note. What does it means? You can change the value of the total invoice correction, because instead of 500, let's say 400. So invoice correcting accordingly, and the VAT return also, VAT amount also will be changed up for that. So once I click post this, okay, which means you 500 worth of invoice, and you issue a credit note for the issue a invoice correction for the 400 only. So if you go here, that invoice, for example, this one, yes, you see the credit note 1000 worth of 1500 invoice, but we corrected the into 1200, the 300. to issue a credit note. So when you are receiving a payment from this customer, just generate payment receipt, pay or petty cash receipt. You will see only the remaining amount only. You can enter it here. I will close this. The main thing is you have to click the generate tax credit note as well. Then only it will reflect. Make sure that that is tax credit note as well created. So here sales invoice, you are making generate. It will show here you can enter the amount of that transaction. You can see this amount. Okay, this is for the credit note. That is sales. In the credit note screen, you can see all your credit note transaction. From there, you can make a document also from this, selecting that your expense document if you want to make against the credit note, if you want to release the payment. In some business only they are following this. Most of them, they do not give the cash to that or any transfer to the check or something. So if you're making a credit note only, you can just select this credit note and print it out also from this tax credit note if you're collected. So this will be your tax credit note to issue your customers. Okay. Then the same process which you are refunding to your supplier to create a debit note. In debit note, which is related to purchases, so you have to go to the purchasing screen. Here there is a debit note option, will be here. If you are issuing in the same process which I mentioned, you can directly go here, click create, and select the supplier amount. You can enter it manually. There is a transaction type mutuals at settlement adjustment, will be here. If that means you can select the document, which document you want to make a mutual adjustment. Document wise, you can select that respective supplier will be there. So you can select like this, and the accounts amount what do you want to adjust this for the to create a debit note for the mutual settlement adjustment. Then the same way, if you are purchasing something and you are returning back to your supplier, means you have to choose the goods return. So once you select the transaction type goods return, this will be changes, form will be changes, and you have to select the customer code. And here the tax credit note received. Once you return back to your supplier, and they will be giving to your tax credit note for that. So that number you have to enter it here. But before entering it, make sure that you have saved this document. So to enter the details, what are the items you are returning back to them, and like example, this much item, and you are entering this much. One quantity you are returning back to the supplier. Once you click post, and then come here, once you receive the purchase invoice, credit note from your supplier, that number you have to enter. Example, this much. This is very important for the VAT return. So make sure that you have entered this tax credit notes, then only it will be affecting in your VAT return. Click generate tax credit note. Simple. So if you click debit credit note transaction, you will see this debit your prepayment to suppliers, and credit your goods. Okay. So it depends on the transaction types, this functionality will works. You have to make sure that whether you're returning the goods, means you have to choose the goods return, and if you are correcting the invoice transaction, you have to select the transaction type as invoice correction, or if you are doing mutual adjustment, you have to select the mutual adjustment. Based on the transaction types, in this form will be show the available which screen you have to enter it. Here there is a basis also is there. This is manually I'm entering for one item. And if you are against any invoice, purchase invoice, you have to select, which I mentioned for the credit note, same process here. You have to select the invoice here, then fill by basis. So what will happen is, based on the invoice, purchase invoice, it's automatically entering these items, because that invoice is only the expenses, so it is coming in the expenses, not the inventory. Same like this. That is for the debit note. Other functionality which transaction which I mentioned earlier, you can able to see this one as well. Also, there is an option for reports here for the statement of account for your suppliers, for this for all your suppliers, and filter you can see. This also I will show you in the accounting and reporting accounts report will be there. In that, I will show you how it will looks like. From this transaction itself, you can able to see the report for the statement of account. What are the for this supplier and for this company, this entity. So what are the transaction will be there and the respective outstanding. These are all, and how long it is available in the aging. So these also for available. You can see these accounts payable and advance paid. So in single report, you can able to see all your payables as well as your advance paid, if anything. You can select the transaction settlement type also. If you want to see accounts receivable or accounts payable, that only will be showing here. And report data also, if you are dealing with a multiple currency, you can select the default currency or currency in the contract. Currency in the contract means if you are creating a contract for any customer or supplier, you will select the currency rate for that, whether it's a USD or a euro or something. The same way, based on that, the reporting will be work accordingly. Okay, so that's for credit and debit notes. So I will repeat again, for credit notes, you have to go here, sales credit notes, not the tax credit notes. Tax credit notes will be automatically created from credit note screen. So you have to enter the properly based on the transaction, how you want, whether you want to create a goods return or you want to create the invoice correction, you can create it accordingly from the invoice screen itself, or else directly come to the credit notes to enter it. Okay. Now, in the warehouse transactions. Warehouse transactions in the warehouse module related to all your inventory transaction can be done from this module. If you are dealing with multiple warehouses, like for example, here one warehouse is in Jewelry, or another warehouse is in Sharjah, some other place, in Dubai, some other place. You want to maintain the stock according to the warehouse, means you have to create the warehouse transfers. Like from one warehouse to another warehouse, you can select this document, warehouse documents. Here there is a catalog is there. There's nothing but we have seen in the sales and purchasing catalog only, the same item master screen, which will be available here also. So it's the same item master you can access from these three modules: sales, purchase, and warehouse. You can see the same item master. Everything is same only from all the modules. So no need to here. The catalog I mentioned earlier, catalog refers to your master data. So first, if you are dealing with multiple warehouse, you have to select the warehouse here. Currently, whatever purchases we have made only from the warehouse, main warehouse only. We have never created for WLE or other branches. So now we are going to create from what are the stock is available from main warehouse to WLE. Let's say first to see the stock where it is available. How will you see that from the purchasing? Balance of inventory reporting to see where the stock is available. So you can select the balance of inventory. The system will give you the warehouse detail, main warehouse, and these items which we have already selected here in this filter. That is why it is only showing these three items. So here we will move to test product. 17 quantities available. From the 17 quantity, I want to move 7 quantity from this warehouse to WLE warehouse. So we have seen this stock, this much stock is there. Let's make one transaction for the inventory transfer. So I'm going to click warehouse, inventory transfer, click create. The sender will be from which warehouse you are sending it, and the recipient will be your another warehouse. So let's make this warehouse. Make sure this WLE, the type should be warehouse, not the department. So department is different, warehouse will be different. You have to make sure the type should be different and select the WLE. And the transaction should be transfers, not for the exploration or any other thing, only for the transfer you are doing it. So click here, inventory. We are choosing the same item. It was 7 items. And if you are putting any content information also, you can put it in the transaction content, like transferring the goods. Transfer the goods to WLE. something you can enter here, the content. Okay, and I will post this. If you see this debit credit transaction, debit your goods, credit your goods. Only the extra dimension you can see from debiting jewelry warehouse and crediting your vein warehouse. Now, if you go this balance of inventory report, that is purchasing balance of inventory report from 17, I'm generating click again. So from 17 to it moves to 10. You can see the main warehouse is now 10 quantity available. We have created an inventory transfer to from main warehouse to jewelry. So now it is jewelry warehouse, it's having test product item, 7 quantities available. And the cost price of the this much same thing. So this purpose to move the stock from one place to another warehouse or one store to another store. You can maintain the, if you are dealing with not having a warehouse, if you have a multiple stores location, you can create a multiple store location in the name, then store to another store. Okay, so now let's see for the another warehouse for if this inventory transfer we made right now, that is main warehouse to another warehouse. For example, if you are providing a third party something that expenses the goods transferring the thing from one place to another place, so they are charging for that. So you want to capture that expenses on this transfer. So just click this transfer document, additional expenses document. You can, if you want to add that expenses to include your cost price, you can, that also you can be doing by selecting which third party is doing this service. You can see the inventory tab, it's same like which we mentioned in the purchase invoice when you are dealing with the purchase invoice and providing any other additional expenses, the same process. We have to here enter the expenses for transportation charges, maybe 50 dirhams example for of that. And the inventory tab, if you want to if you enter these expenses, you have to distribute this by quantity or by amount. If you distribute by quantity, this expense is distributed accordingly in this 50 dirhams into 7 quantities. So you can add this one to see the cost price. You can see 593, right? Here, if you distribute these expenses to your cost price, it will change. You see 593 to 600, because this expenses also you are including into your cost price for that item. So the price will be increased on that particular warehouse. From this warehouse or from the store you are dealing with the price, it will be increased. So that is the reason we have a additional expenses for the inventory transfer documents. So you can create a multiple warehouse location in the warehouse in the under catalog. You can create all your warehouse list here, like create the description. If you have another warehouse, if you want to create another warehouse like Sarja warehouse example, you can create like this Sarja warehouse something, and type should be warehouse, not the department. You can drop retail and department will be there should be warehouse. Or if you're dealing with the store, you can select retail also. But the main point is, if you select retail, if you're making a purchases, it will not be stored that one. So make sure that department will not be showing there. So you can make sure that it will be entered the warehouse, so that the stock will be maintained accordingly. The name, however, you can make whatever you want, or search a store or something if you want. If you're dealing with multiple retail stores, you can able to select the name. So I created a new store also. Same way, you can create multiple store location or multiple warehouse location. You can create accordingly. And this set as default warehouse means you can see the highlighted one, dark color, black color, which means whenever you are making a purchase transaction, by default, this only will be the main warehouse. But after that, however, you can able to change it in the transaction level, but this will be the main warehouse. So you can setting this warehouse as a default for this warehouse. Okay. Now the main part is for the stock take process. Stock take process in many stores, many stock inventory management, they are dealing with, they will do daily basis also, they will do stock take, or maybe monthly once or 2 weeks once. It depends on the businesses how they are making that stock take. In our application, there is inventory reconciliation document is there, which means if you click the inventory reconciliation document, create which warehouse you are doing this stock take. So you can select the warehouse accordingly, which warehouse you want to select. Then date of the stock take, inventory. Here, if you have like 1,000 items, if in your system is available and your warehouse is also 1,000 items is there, you cannot enter one by one here. So you can just click fill by balance at the warehouse will be there, which means whatever the stock is available in your warehouse, just fill it up. Every item, all the items will be filled out automatically. You can see this item, quantity of accounting, the price, everything will be there. These details, everything as per the system entered. So system is available this much quantity. For example, maybe in the physically you have for this item, you don't have stock 90, maybe 85 or something. So what you have to do is maybe that 5 quantity may be lost or maybe damaged. So you want to write off the document from the 5 quantity. So what you have to do is you have to just verify this. Instead of 890, you just select 85 here. So once you enter, the deviation column will be -5. Same way, you just verify, you have come to know that this item, not one quantity, we have 5 quantities. So you can enter 5 quantities, which means increasing that. Basically, this is a negative adjustment and the positive adjustment. So you can do the stock take according to your warehouse physical stock with the system stock. So once you like this, you one by one, you are selecting this, what is available to take the stock take, proper stock take. Then you can click save. What does it means? Now document has been created as an inventory reconciliation. Now if you go here, this document which we created right now, if you open it and see all the items, I'm just showing for example for 2 items, for the negative and positive. Then you have to write off the document for this. In the warehouse, there is 2 documents is there: inventory receiving, inventory write-off. Inventory receiving document which you are receiving directly if you are one to item, then write-off means creating the write-off. So since we made the stock take through inventory reconciliation document, you can just select here, generate. There is a document here. So no need to go back to the manually, you have to again enter. So just based on this inventory reconciliation document, just click inventory receiving. System what will do, you can see the corresponded other operating income. Department will be main department, income this much. Income item will be other operating income. So the warehouse where you are doing the inventory reconciliation automatically filled up everything. Basis also based on the inventory reconciliation document, you are creating the basis document. So if you see the inventory which we entered, they made the adjustment for 4 quantity. That is here only one system was there, but actual was 5. So the deviation is 4. So system, when you're creating generate inventory sync, what will happen is it will only what are the deviation which is available, it will pick that item and it will automatically pull up everything. If you have 10 items in the deviation, it will automatically pull up. Just click post. What will happen? Just it will receive the stock from your inventory based on the stock take. The same way from the inventory reconciliation, you can write off also. If you click inventory write off, this bulk item will not show, only pine back will show, because this is a negative. So you want to write off this stock from the system. So if you click the inventory write off, it will go to automatically here, and that will be your other operating expenses. Here there is a pine back this much quantity. You can just select, verify this entry and post it. You can see the GL account also from here. It will deduct your goods account, which means your inventory. Okay. Again, for one more option is if your inventory dealing with the serial numbers. That is product serial number. That product serial number, how you are capturing in the sales, the item master itself, when you are creating the item, for example, item with serial. Okay. While creating the inventory item, you will enter all the master detail here. So as I mentioned earlier, I have given an example in the previous session for characteristic batches. So this, if you select this checkbox for serial number and sale, this option will be enabled in the more option serial numbers. So you can enter the serial numbers accordingly for one item. If you one item will have a multiple serial number also, you can create it. But when you are creating one serial number, for example, this serial number you are receiving the stock from any supplier you are receiving. Example, this supplier you are receiving. So here it will show unused serial numbers. So you can see this serial number I'm receiving, example. Okay, and select. Then for each serial number, for each quantity will be there. Let's say 600. So I'm receiving the stock for this serial number. Inventory will affected. Now I want to change the serial number from maybe something wrongly you have entered or some other serial number you want to change it. You have to go here, warehouse, and serial number adjustment. This document, if you click create, you will enter the warehouse where the stock is available. You can enter basis also from any document, particular document if you are choosing, that also is possible. You can select like inventory reconciliation document. From that you can able to do this also. So here we are going to click item with serial. Okay, here no need to create manually because there is a fill option is there. Fill by warehouse at warehouse. So this serial number, two serial is there, two quantity. This is the first one and this is another one. This is the original one. Now if you want to change this, we are going to change only instead of 78, I'm creating, I remove, okay, only this much and select post and close. That's it. So your stock will be now with this serial number will be changed. So that purpose only for to see the serial number adjustment. This report stock balance. There is a two reports is there. In the purchasing, there is to see the balance of inventory, and here you can able to see also for your stocks balance. The purpose of this, if you have a, but in this report only, it will show the stock only. What is the balance for the stock? You cannot see the average cost price for that each item. So that for that only, we have to go to purchasing and balance of inventory report. So you'll have that each item level. So for that cost price also, you can able to see that for particular item. This is for the warehouse module to cover it. If you have any questions, you can ask. For the warehouse transactions. This report warehouse and all, if dealing with any customer with the multiple warehousing, this will be very useful for them. Okay, I hope there is no, it's clear. Okay. I will proceed with the next topic. For month-end closing. Month-end closing procedure to in FirstBIT, you can allocate. Okay, before month-end closing, I will show that because otherwise you will not understand this. So I will start with the fixed assets. Return. Both the things I will cover it now. So first, in the accounting session, there is a VAT return is there in value added tax. In this value-added tax, you can see a lot of documents. You can able to see input VAT transaction, output VAT transaction, and calculation of VAT liability, everything. First thing, if all the transaction for the period you are making for from so and so, for example, January to March or April to June, something. So what you have to do, you have to enter all your transaction in the, like I mentioned in the previous sessions, you have to enter the transaction with the VAT taxation, everything. Now, if you click after the end, you want to submit your VAT return. So come here, this screen, accounting, VAT return, and click create. Here, the tax year of the which year it's automatically pop up based on your entity taxation, and the period reference number you can enter. This is which period we are doing, like first quarter or second quarter or third quarter. You can select the period reference number here, and the date of submission of the VAT return. It's not the VAT return your end of the date. When you are creating from the system, you have to enter the date when you are creating it. And based on this, this screen looks familiar to you because the same screen you have seen in your FTA portal, the same fields, everything. The main thing is here you have to select the entity, which entity you are, because since I have a multiple companies within your single database, so I have all the things you can select, do the VAT return accordingly with a different year number if you have. So we are making transaction with Onion transaction Onion Nuts entity. So I'm just selecting here. Here there is a date field is there. You can select this button also to select. Okay, I want to choose only June, July, August, September example, and select. You can select like this also. The period will be automatically from 1st of June to 30th September. Nothing else. This is only, you cannot enter manually here. Everything automatically pop up here. So just once you, this header part you enter it, click fill. System automatically fill up all the details with the respective fields. So far we didn't have this company is Dubai based, so only Dubai transaction only is there. There is nothing is available. So only 000 only. This 35, how it comes, I will show you that one also, because if this field, VAT return field, I will show based on your transaction in the sales invoice, VAT sales and other output. Based on the transaction which you make in the sales invoices, this emirate. Based on this emirate you are selecting, all your transaction information will come here. So this will be, this amount field column will be your exclusive VAT, and this will be your VAT amount. For all your emirate wise from till 1G, 7 emirates will be there, and the tax refund provided tourists and the tax refunds. This is not available, implemented so far in the some companies only. As per the government, you have to register for the tourism, then only you can eligible for this. Then supply for the subject reverse charge mechanism for the all your supplies. Zero rated transaction. For if you're dealing with exports, you can able to enter when I mentioned in the invoice screen in my previous session, you have to, based on this transaction we made. Remember, for selecting this link, you can choose export taxation. So if it is export transaction, means automatically this amount will be converted into exchange rate of this particular date. Then the VAT amount will be applicable accordingly. If you want to see this one, what is the transaction, this much amount it came, means you can click detail also. System will give the list out of how much transaction with you made. See, 73 zero rated, ZR is for a zero rated for the tax codes, and document date, document number, how much is that invoice amount for the VAT, and exclusive VAT, this one. So for this amount, total 2 transaction was there. So total amount is to this 2 series 1531.80. The same way, all your fields will have the details field. So if you want to, this transaction 79,000, how it comes also, you can able to verify these details. So all your history transaction with the VAT applicable, it will be showing here. Okay. So for the same case, for the exempted supplies, based on your taxation, it will come automatically for the year. Goods imported into the UAE. This information based on your custom declaration. in previous session, we have seen the purchasing custom declaration screen. So based on the period which you have created, it will take all your reverse charge mechanism here. It will affect in the VAT return. So that's why in the previous session I mentioned, based on this custom declaration form, whatever you are available, what are the details is available in the screen, you have to enter accordingly. So to reflect the same information available. In a FTA portal, as you know, that you cannot edit that one. It's coming from the Dubai Customs automatically. So you have to verify this. If any changes or any adjustment, you can make it in this tab. Okay, so this will be for your output VAT. Second tab, that is 9th and 10th box, refers to your inputs. In inputs, input VAT means whenever you are purchasing something, it will be input, but that doesn't mean that it's a recoverable VAT. So that's why I mentioned earlier in the purchase invoice document, whenever you are creating any document, you see in the right side tax invoice received. If you're not creating this example, I created this invoice, so which means it will not appear here because I didn't create the tax invoice here. So in this VAT return form, it will not appear. Once, as soon as you create the tax invoice, I will show you now. Okay, example, this is the amount. Okay, now I'm creating this example, this much, and today's date. Okay, now you see the amount will be changes there after that. So I will post this generate tax invoice. This is the today's date, right? Yeah. Okay. So the period also which you are selecting till September. So when I click fill again, system it changes the value. So that is why very important. Whenever you are making a purchase invoice, you have to create the tax invoice for the VAT return purpose. However, you can able to see your reporting also for that. How to check that whether I created because once a lot of invoices created, you wouldn't remember that whether I created or not. There is a separate report is there. I will show you how to understand that whether it is created the tax invoice or not. So this is for the reverse charge mechanism which we created here. It's automatically input VAT also will come, and total input VAT. So total due tax for the period, that is this one, output 10,448 here it will come, and this 6,600 will come input. So output minus input will be your VAT payable. If it is negative, means you can check this box for the refund excess recoverable tax. Government will be giving you that excess. Okay, then click save and close. That's it. So once you click the save and close, you can, whenever in your management, if you want to give that VAT return, whether you have submitted or not, from the system you can generate report also. You can able to see what are the details is there. All the information will be available in the VAT return form. So this is for your auditing purpose also. You can able to internal audit purpose also. You can able to check this one. Okay, now we submitted the VAT return, and you are going to your FTA site also and submit your VAT. And you are paid through maybe dirham account or credit card or some other thing. Then you want to make a expenses for that. So how to do it? Go to the calculation of VAT liability, the accounting, click create, and you have to select the date of the month till 30th, click fill. So automatically your VAT payable, VAT receivable, this is the total VAT receivable. You can click post. If you select this, you debit your VAT payable and credit your VAT receivable. After this, you can select the payment expense or payment receipt, whatever the document you can make accordingly, because there is no expense document because the amount is in the tax payment. That's the reason it's giving the message. If you click the tax receipt, the transaction type is a refund. If it is a negative, some amount, if your refund you are doing means you can able to receive that account also like this. So all the information will be automatically coming here. Okay. So in some most cases, there is a scenario will be in the VAT return, this field adjustment. I want to adjust input VAT, or I want to we made the sales, but the customer is not paying to us, but we submitted the VAT return. So we want to adjust that the customer is a abscond or something. So as per the law, you have to create a bad debt. There is a procedure for that. So based on the invoices, and you have to select you have to proper intimation to that particular customer for any email or any official document. You have to proceed to submit to your FTA. But in this system, how will you do it? The process and all that as per the law, you have to submit some additional procedure will be there. But in the system, how will you do that bad debts to adjust your VAT? So that purpose only we have created this accounting input and output transaction separately. If you want to adjust your output transaction in this scenario example which I given, if you're giving bad debts, click output, open create document, which customer you are making this one, and the emirate of the output, generate GL. This box should be checkbox on this. Then the transaction type, you can see a lot of transaction type is there. Based on the transaction type, you can able to adjust your output. So in this case, it's a bad debt. You can select bad debt, whether the adjustment should be increase or decrease. You have to choose that one. So you can accordingly, based on the adjustment type, it will be the adjustment will be negative or positive. So accordingly, you can select this. And basis number, if you want that invoice number or any number, you can enter it here, the date of that invoice. Then the item details for that invoice, you can enter how much you want to remove that 5% if you enter. This 35.71 will be changed. 35.71 VAT return will be increased or decreased based on the adjustment type. It will be there. So once you're done, you can select post and close. This amount only, it will automatically comes in the VAT return form. This 35.71 is coming in the adjustment field. To if any of the transaction, if you want to make an adjustment in the VAT return, you have to use this in the accounting output transaction or input transaction. In the input transaction, you can see create for any company we want to adjust the VAT. Maybe some services you have not paid to your supplier, but they have issued the invoice, but they have not. You are not provided the some minimum amount. Or any cases, for example, you issue the invoice from your customer, supplier, and you are issuing, you have submitted your VAT return also in the previous quarter. But after that, you didn't pay the services or some other example. So you can select the transaction type here, invoice received, and the adjustment type increase or decrease. The same field, whatever the output transaction. Make sure that this generate GL transaction also is to reflect your GL generated, and here the what are the items you are providing that prices also. Make sure that the VAT should be 5% also enabled. Here should be 5%. So this amount will be reduced or increased according to your VAT return. Clear? Okay. So here in accounting, these are the VAT related documents. You can, if any adjustment in the VAT related, you can use input and output transaction for the adjustments. For bad debts or any adjustment you want to make, you can use these two documents. For the calculation of VAT liability also, for the paying your expenses or receipts, for the VAT related document. and VAT return for your submitting your FTA VAT. These 4 documents for your VAT returns. Okay, now as I mentioned earlier, you want to see that lot of invoices you have done, whether you have created a recoverable VAT invoice or not. So for that, there is a accounting reports will be there. Here you can see there is a reports in accounting, recoverable VAT, output VAT, input VAT. In the input VAT, if you open it, you can able to see, let's say I will remove this. Here, you can see here the closing balance. If it is shows this invoice, these invoices means if you open this invoice, you see the tax invoice not created. How do you find out this? Because in the closing balance, if the value is there, means which means you have not created the tax invoices. If this become null, means the closing balance, which means you have created to your tax invoices. If you open this, you can see tax invoice you have created in the below. So you can able to identify in the input VAT report based on that. Once if the value is moved from this field to this field, in the accounting report, there is a recoverable VAT is there. So in this report, what are the details is available only, it will reflect in your VAT return screen. So you can able to identify with this help of this report to identify which are the invoices you are not generated tax invoices. So in some cases, if you want to, you may have to, like for example, which I mentioned earlier in the previous session, if you're doing a fuel charges for your purchasing, but the car is not registered in your company, and you cannot claim the VAT to your government as per the law. So, but you have paid tax to that your expenses. So in this case, you can create the invoice receipt with the tax input VAT, but you cannot claim that. So you don't need to create the tax invoice for that. So it will reflect your VAT expenses with the reflect in your recoverable VAT. Simple. So you can create only the purchase invoice only, no need to create the tax invoices for that. Okay. Okay. Now, as you know that fixed asset is an add-on module, but in some cases, if you don't want to, some customers they don't want to buy an add-on module for the fixed asset. How do you capture without add-on? You can use it. I will show you how to use that. You're a fixed asset. In accounting, there is an option called other expenses. In the service tools, other expenses is there. You can create here. This other expenses you can use if they are not buying add-on for HR payroll or any fixed asset. You can use this document for other expenses. Here you can create like depreciation of your fixed asset. Every month they can come and directly doing here manually. You have to choose this because it's not they are not buying add-on, so you have to do the every month to choose which fixed asset you are selecting. So you can able to choose the fixed asset, other expenses for the other operating expenses. This will be the GL account for the debit. So you can choose accordingly which account you want to, debit and credit. So account analytic to select the fixed asset. So whether you are doing this amount only for the depreciation for that. Example, this much. Okay. So this is for the manual documents for the fixed asset. The same way to do the HR payroll also in accounting, other expenses. If they don't have any payroll document, you can enter your comments like to provide salary to all employees. Here you can select debit account for your employee benefit expenses, and you can choose labor cost, the employee who is the employee for that, and the business activity. Then the credit your staff salary settlement GL account. So depends on the chart of accounts how you are making. You can select accordingly debit credit entry manually for every month for the salary process. So in the dimension you can enter submit the employee also. So no need to use your HR and payroll module. So this entry for this transaction, other expenses for whoever is not doing having that add-on for fixed asset and HR payroll. So you can do the other expenses document to process that everything. Manually you have to do. So now let's go with the fixed asset module. In accounting, there is a separate module is there for fixed assets. First, if any fixed asset if you are buying, you have to create a purchase invoice for that. First, you are purchasing, for example, for a computer or anything, you have to make a purchase invoice from your supplier. So first thing you have to make normal purchase invoice that you have purchased from your supplier. Create example, this supplier I'm purchasing inventory. Let's say desktop PC. So it's not there. So I'm creating a new item, inventory item. Okay. Example, 1 quantity or 5 quantity, whatever it is, 5 pieces of computer. The value is maybe 4,000. So total worth 21,000. I purchased this. Normal way, whatever the purchase invoice you created, it will be there. So once you created, it will affect your inventory. Okay. So to make that, because it's not your selling or trading, so you want to move to your asset, fixed asset. So go to fixed asset module that is available in accounting, fixed asset. First, you have to create your asset first. So in this screen, you have to create the description of the asset, desktop computer example, and the invoice number which you received from your supplier. You can enter that invoice number here. And the type should be fixed asset, not intangible asset. So it should be fixed asset. And click save and close. Save. So here you can see edit GL accounts. One second. So my voice is clear, right? Okay. Okay, fixed asset will be created in this, which I mentioned earlier, the edit GL accounts. There you can define if you are this GL account sort of accounts automatically, which I mentioned in the first session. I showed you how to create the defaults in the chart of accounts. So based on the default accounts, it automatically coming here. If you are changing any particular asset, if you are each asset code, if you want to maintain your based on your chart of accounts, you can set up this account here. So based on this account setup, whenever you're making a depreciation, it will automatically affect these accounts. So now I created one fixed assets. Okay, that desktop computer I created. Now, second thing is, first thing is we have created the invoice received from your purchase supplier that you have received the goods. Now it's as a inventory. Now only we created as asset. So we have to move that inventory to your to the fixed asset. So the step is accounting fixed asset entries. So here, when you're creating a document, here the warehouse should be proper warehouse which you have received from your supplier invoice which we made. So the main warehouse only we received. And here the item, you can see the red dotted highlighter, which means the underlined for the red color, so which means it is a mandatory field. So here only thing is you have to select the item desktop PC which we created in the invoice received, how many quantity we have received to move to your fixed asset. Maybe you purchase 4, but you want to sell it for the 2 also, you can maintain 2 fixed asset. And here the amount of that amount of the asset, total 21,000. Oh, sorry, without VAT it should be 16,000. I think let's see the value. Okay, 5 quantity. So 5 quantity means 20,000. So here I will make 20,000 of the value, and then click here fixed asset tab. Here click add. It will show the asset which we created right now, desktop computer. I will select this one. The initial cost of the asset. For one initial cost, example, 4,000, linear depreciation method, and useful life cycle. It will be 24 months or 36 months, depends on the asset code. You can define the life cycle of that. And you want to depreciate if you want to depreciate it, you can select this. Maybe if you don't want to depreciate, you want to move it to the fixed asset only. If you want to depreciate it after after 2 months or 3 months, then no need to select this one. Only depreciate you can maintain, but no need to current month. If you are dealing with the current month depreciation, maybe next month only you want to do, means you don't need to select this box. But if you want to differentiate it in this current month only, then you can select this box. And automatically based on the setup, it's coming expense GL account, everything will be filled out. Here you have to choose the expense item. For the depreciation cost, you can select this. However, you can able to, by default, these are all options is there. But if you want to separate anything, you can create on your own also. So what will happen when you are creating this? Once you created this fixed asset entry, click post. Okay, because the item cost is initial cost, we have entered 4,000 here, but here we have entered 20,000. That is the reason. So here I will change it to 20,000 and post. So now the document has been posted. If you see the entry debit credit financial entry, debit your fixed asset at cost and credit your goods, which means now whatever you purchased in your inventory, from the inventory to it will move to your fixed assets. Now after this steps, accounting fixed asset entries, only one document only you are going to create, that is done for your fixed asset entry. So your next step is, whenever you are doing a month-end closing procedure, your depreciation amount which you have defined in this system based on the 20,000 initial cost and the linear method, so 24 months. So 24 divided by 20,000, every month evenly it will be calculated, depreciated from this initial cost. So second topic, next step is in accounting, month-end closing is there. Month-end closing procedure. For all your financial allocated costs, you can see for each month will be there, and you can choose which entity you want to select that one. So example, this month we made a lot of entry. So you can select the calculate depreciation, first box. You have to select each and everything for every month-end closing. You have to select this one to allocate the cost for your financial reports. Basically, to once you do the month-end closing only, it will be affect your financial statements. So, for example, if you have done the month-end closing, now you click execute. That's it. If this right side, everything will be green color once you do the month-end closing, which means it's already done everything. So, but for example, if you've done this, but you want to make one more, entry for that, then you have to cancel month or not required. Every time you are making a backdated entry, then you have to make sure that this month end closing executed once again. Then only that entry will be allocated properly. Otherwise, it will not affect. So month end closing is very important to allocate the cost, to calculate the depreciation, and if you are doing HR and payroll module, to calculate the end of service benefits also. Based on that only it will be there. So if you're not having that HR payroll add-on, it's not required, but you can select anywhere to calculate your month-end closing procedures. So a simple month-end closing only. So every month you have to do from, if you're starting from the January onwards, you have to make sure that all the month you have to do like this to make the month-end closing procedure properly. Here, fixed asset depreciation, the blue color link in the top, month-end closing. So you can able to see your month-end closing documents. And this 30th September we created now. So each document, each month, it will create one depreciation document here. If you open this, if you go to the fixed asset in accounting, fixed asset entry, you can see this document which we created right now. In the, you want to see the reporting or any other thing, you can open the desktop fixed asset. You can select the blue color link in the top. So all your, in a single screen, you can able to select all your parameter fixed asset and what is the status of that. So everything you can able to see, and statement of depreciation also you can able to see from this. So in this report, you can able to generate the report from outside also, from reports of accounting. There is a statement of depreciation report is there. So basically here your the asset code, asset name, the initial cost of that, and the depreciation for that for the month, and the net book value right now. So once the depreciation done, automatically by end of month end closing procedure. So remaining value is this much. Now you want to make the write-off from sales or write-off. If you want to make a sale from the fixed asset, you can create to whom you are selling this one, this asset which you are making, and you can select the asset code also here. Like example, how much you are giving that initial cost and net book value. Example, net book value, accumulated depreciation, you can select this much. If you click calculate, automatically it filled up everything. No need to manually enter. You have to set the amount only here. This is a net book value, but you are selling maybe 25,000 means. So that will be your income, the operation. I will select main department, then post. Depreciation for fixed asset was already occurred in the September. So okay, that's the reason, because we have done the depreciation for the current month. So you cannot do in this month. So you have to select some other month. Okay, so then posted. So if you select the entry for that, the fixed asset sale. So debit your fixed assets depreciation and credit your fixed asset card. You can see in the last entry. For the debit your customers and credit your other operating income. Your revenue account will be affected on this. So you can do the fixed asset sale also. Sometimes if you want to, all your depreciation is done, but you just want to write off from the asset, means you can just create it and select the expenses item, which asset you want to write off. That also you can just select calculate. You can do this one. For manually, you have to write off after the depreciation is done. Okay, once you have to select the asset code, then click calculate. So everything will be filled out automatically. This process, if you want to write off from the, once the fixed asset is over, you can write off from your assets. So this document is for that one. If you have any question in the fixed asset, you can ask me. Okay. Okay. Now one more reporting is there for your all your financial report. So this is the main fixed asset for every documents. If individual fixed asset means you can transfer the transaction type, transfer to employee or transfer from employee. You can select that transaction type and select the inventory for that one. Which individual you're giving to that asset. So you can select this, which we already sold, so we cannot give that one. You can select the inventory on this. You can move to your fixed asset accordingly. The cost price of that. So individual fixed assets also you can able to give to the employee. Okay. Now accounting reports, everything we can able to see for the all your reports, and transaction report also we will see that one. Okay. Now go to your accounting statement of mutual settlement. This report nothing but your statement of accounts. Once you click open, all your outstanding for customer, supplier, everything will be shown. But however, based on the parameter, you can filter it out, whatever you want to see. If any particular customer also or supplier also, you can able to filter out here, and which will give the information for all your payables, receivables, and advance. Also, it will show. So how long it is aging also, it will be show here. How long it is outstanding. This information you can able to see free from the home page also. From here by what is outstanding, and if you double click on this, it will open this report only, statement of mutual report. Then for your trial balances. In the trial balances with the turnovers report, will give the information of all your period for the entry for all the transaction, opening balance, credit, and period turnovers will be there. For example, this current, let's say okay, this current trade receivable from the customer. So if you want to see this information, just double click on this. System will have that two reports. It's nothing but the transaction GL and statement of the trial balance GL and the trial balance of the statement of account. If you open this, it automatically will down that information for the each trial balance for the each GL code. You can able to see all your split up also. Also another double click on statement of account current trade receivables, so which will give the information of the each transaction level also, how that amount has been coming from that system. So those full history transaction you can able to see from that total closing balance here. You can see 317762, which is will be coming from here. So that's those two reports from here only, the transaction GL and trial balance for the account. Okay, this statement of account will give that for each account, each GL account, you can able to select this information, which I showed you earlier. These two report only. From the trial balance, main trial balance is your trial balance is this accounting trial balance with the turnovers or GL. So both the reports you can able to verify for all your history transaction for the trial balance. Next thing is your financial statement. Financial statement, nothing like your cash flow statement, your profit and loss, your balance sheet. So these three reports will be shown here. In the cash flow statement, if you remember in the last session, I mentioned your expenses, and you can, if you write off money from your expenses, you can just select with the transaction type others in the money section. If you're making any transaction, if you select this document when we created yesterday, last session, the transaction, if you select the cash flow item. So based on the fuel charges, if you want to see the cash flow report, you can able to see this one, outflow and inflow. You can see the fuel charges, which we created this much. So you can able to your inflow and outflow report, cash flow, you can able to see in this cash flow statement. If you want to see this field charges 150, what are the documents, what are the transaction which you made this month, double click on this, it will be recorder option. If you click that recorder, it will give the two documents, one is 100, one is 50. So you made this two expense document for the your pay tickets from the expenses to creators to for the field charges. So you can able to identify that from the single report, you can able to get the transaction report. Second report is your financial statement of financial position. It's nothing but balance sheet. So if you open your period, all your current asset, and equity and liabilities will be showing here. And the quick setting, if you click quick setting, based on the period month, you can select the balance sheet accordingly, and based on the entity also you can choose it, because all your financial report will be based on your entity. If you are dealing with multiple entities, you can able to extract the report with the entity wise, so we can maintain the separate company accounting properly. You click generate, so accordingly to your balance sheet will be coming here. Next is profit and loss, that is income statement. You can able to same format all your profit and gross profit and operating profit, you can able to see the same all your report functionality. If you want to see that one revenue, you can just double click on this, it will go to your report trial balance report only. From there, if you want to what is it, goods or something, you can just select this one, so you can just navigate the report inside the report. So what are the details is available, you want to extract it, you can able to extract it. For all your reports, you can able to save it into a PDF or something. You can go to in more action, or maybe some reports will have this year itself, or else you can select, if you not find it, you can select more action and click save. So you can able to save this in PDF or Excel, whatever format you want, you can able to save this into your local computer. So this for your statement of financial statement for all your accounting. This is an analysis, one separate module is there. This analysis only nothing but for all your reporting purpose only. In the single analysis, you can see all your reports, important key reports for your transaction level, which financial report also you can see. This financial report just now we have seen, and sales by companies means whatever the sales you sold to your customers, customer wise will be the information for which item you sold, how many quantities, how many is the amount, what is the amount. The complete list of reports will be there. And second thing is gross profit. This is very important for to see that item, what is the profit for that each item, what is the invoice, how many quantities you sold, what is the cost price of that, and what is your gross profit out of that percentage also you can able to find out. If you are going with the negative means, it will means you are selling very low prices, so there is no profit. So that's what the report will give, the complete information about your transactions. This statement of mutual settlement with documents. Statement of mutual settlement, which I mentioned earlier, that was a statement of account, which is you can able to see your outstanding from your customer and supplier. Statement of mutual settlement with documents means there's nothing but your ledgers, your customers' ledgers and supplier ledgers. So you complete history of your transaction with your customers or suppliers, you can able to see. I selected two companies only, so these two companies documents completely showing there is opening balance and a debit increase, debit decrease. So this is a closing balance for your respective company, respective customer or respective suppliers. So these reports can help you out for you to see that what are the transaction level. You can able to open from the report also if you want any transaction. If you want to open, just double click on this. It will open to navigate to the respective reports. This information you can able to find out in the sales document also. You can see in the report level. This document only, this one. The same we are consolidating a separate analyst module to which are the key reports for that management. You can use this one in the analyst report. So both the options available in both the modules. Okay. Also, if you go your sales, there is a report of sales is there. If you go click here, you can find out lot of other related reports also. Like for example, here, if you want to see consolidated analysis for your customer order, you can select here. You can complete list of the consolidated analysis report, or maybe fast moving items you want to see. That's also you can able to see for which are the fast moving items report. And sales discounts project wise, which I mentioned in the previous session, to see the report. So basically the purpose of the reports, you can able to find out all the modules. You can see this report of purchasing. So we'll have additional reports which is available in this. In the front screen will be which are the key reports which is frequently which is required for your businesses. It will be available in the outside. However, you can able to click reporting of purchase. You can see all the reports also, whatever the requirement you want. Okay, then these are the reporting side for your all your purchases transaction level. For all the modules, each modules will have that reports. If you go for the money section, you can see the reports for the respective transaction modules. Okay, now go to one more important thing is very important thing is for FTA audit file. If the FTA ask you for the send you the audit file from the system, you can able to generate that audit file also. This will be based on the article which we FTA provided to us. This has been developed accordingly. So click the accounting session. There you can see the FTA audit file. If you click here, the period you can select from here which period you want to send this. Example, if you're selecting August or September or whatever the month you are selecting, and click upload. This will give generate the one Excel CSV file. Maybe you can save it wherever you want to path, and you can able to this information. What is the message is showing is because of the some in document number is not filled out in this, because those information is required for your FTA audit file. So that's the reason for the custom declaration or invoice documents is mandatory for that. So that's the reason this message is coming. So I will select that in August month. Let's see how it is coming. So I already saved, same message is coming because of that entry is that. I will show you how it looks like. If you want to share this, 1 second. Want to share new share. So I will give the how it looks like. Okay. Let me share this one as well. Okay. So it will give that information for your FTA file. So I'm trying to share this one as well. Okay. So this information you can send it to your FTA when they ask for that. So system can be have the facility to generate the FTA audit file as well. So if you have any doubt, you can raise it. I will try to answer that one as well. So we have covered so far for almost all the features for to create a transaction for your creating invoices and making a purchase invoices, import custom declaration, exports, and incoming outgoing payments, advance receipts, and also we have seen arrows transactions and fixed assets for your mutual settlement, month-end closing process, general sort of accounts, opening balances. Almost we have covered everything. In the reporting also we have seen. System setting also we have seen. So we have covered almost everything. We have done for all the important basic functionality from the FirstBIT accounting system. If you have any question apart from that, you can ask also. So I will give an action right now. Okay, we have seen all the transactions. Thank you. If you have any question, you can ask. I hope everything is clear. Thanks for your participants. Thank you, everyone.